I want to welcome in Matt Tuttle, CEO and CIO, Tuttle Capital Management. Matt, thank you so much for joining us, and happy Friday. Let's talk a little bit about Tesla. Shares down more than 25% year to date. A lot of that selling pressure coming this week alone is really off of levels that we saw when it got, Trump bump. You call it the most divisive stock, or arguably the most divisive stock on Wall Street. You say if it was just a car company, you could see the bear case. You say it isn't. Some agree with that view. So how should it be valued from your perspective?
Yeah, so I really look at Tesla as an AI vertical where they've got their hands in everything. They've got to execute on it. The full self-driving, the robotics. They've got a lot of work to do, but if they can do it, this company could end up being really undervalued here. But again, if it's just an EV company, totally different story. It's run up a lot based on, Elon's relationship with Trump. And then I think people are realizing, wait, of all Elon's companies, this one isn't really going to benefit from a Trump relationship. So, it's kicking around the 200-day moving average. It's got to hold here. And, and then they've got to execute on the entire AI vertical vision to really justify it moving higher.
So, some of the Tesla run-up also came around his cozy relationship with President Trump. But now he's also running this Department of Government Efficiency. And there are some questions about him being stretched too thin. That's happened before, when he bought Twitter. Is that still cause for concern? Or how do you view that extra job, essentially, that he has?
So I don't worry about a guy like Elon getting stretched too thin. What I do worry about is him pissing off half the country. And, I think you're seeing that, too, in some of the Tesla numbers. So, I think that could be a little bit problematic.
Yeah, some people say they won't buy the cars because of all that, especially with how things are being handled with job cuts and just, kind of a hatchet, acting as the hatchet man, essentially, the new age hatchet man. So what do you see as the biggest risk, though, to Tesla executing on its AI and robotics vision?
Yeah, there's a lot of competition. Everybody realizes that AI is the future. They also realize that eventually physical AI, the robotics, the self-driving is the future. And, they've got to be there first. If they're first, that's a massive home run. But, a lot of competition out there. Everyone is fighting in this space. I would not bet against Elon long term. Short term, though, I want to see this hold at the 200-day moving average. If it doesn't, then, we could still have some problems.
Okay, so I want to pivot and take a look at Supermicro. Shares are actually lower in the pre-market, but it's had a strong run this year. You've said Nvidia is the obvious AI winner. We'll put aside that, share price downtrend that we saw yesterday, down 8% for Nvidia yesterday. A lot of that, obviously, also that de-risking effect that we saw in the market, really risk taken off the table, really on worries about tariffs. But you say that, Nvidia can't function without Supermicro servers. Do you still view it that way? And how close is that relationship, and how tenuous is that relationship in your view?
So, yeah, the way we look at the AI theme is we want to figure out who are the winners, but then the next level is who do the winners need to make their products work? And, Supermicro is, in my opinion, one of the top AI infrastructure names. But, everything is tenuous. I mean, number one, we're now in an environment where, stocks had run up on all that CapEx, and now investors are asking kind of the inconvenient question, when do we monetize, and do we need all this spending? So that's crushing all of these stocks. I think long term, Supermicro is a name I want to own. Right now, you'd just be catching a falling knife.
Right. It seems that way because it seems like in terms of the price action that we saw this week, some of that had to do with just relief because they finally filed their financials and they won't be delisted from NASDAQ. What about the outlook for Supermicro? What's your point of view? How critical are they seen as an AI player?
I think right now they are a critical AI player. Again, a lot of competition in this space. Right now, I would put them as the leader. Again, they've got to execute. But, if they do, I think eventually, when all of what's going on in the marketplace settles down, this is a stock you want to own.
Is the AI super cycle still a solid investment theme for this year?
For this year, yes. For today and maybe next week, I would be very, very cautious on what's going on. But, AI is the future. And we're just in the early innings of what this stuff is going to do. But, it's the way market works. Stuff runs up too far, too fast, and it's got to come back in. And right now we're seeing the comeback in.
And really quickly, Matt, are there any other companies that may be seen as critical players in this AI super cycle that the market may be underestimating, especially recently?
Not underestimating recently. Everything has come down, but, the data centers, the nuclear, the cooling, all of that stuff you're going to need to own, just not today.
All right, Matt Tuttle, CEO and CIO, Tuttle Capital Management. Matt, thank you so much for joining us today.